Hey, welcome to the weekly Redfin live housing update. So, what is really going on with the housing market? What's happening with it? Well, that's what we're going to try to figure out today. This live is going to be a little different than the previous Redfin updates I've done in the way that we're going to jump into the Redfin data quickly. We're going to review the Redfin National Housing Market Update article and then look at national data for the housing market. Then I'm going to review just a few cities I have on my list today. I've got, of course, Columbus, Cincinnati, Cleveland, because I'm in Ohio. And then I've got Los Angeles, Indianapolis, and Chicago. Those were all requests from viewers for me to analyze. So I'm going to do that today. Uh, and I'm going to try to run through that quickly because I also have something special, and that is the Zillow forecast. So we're looking at Redfin data at first, but then I'm going to switch and look at Zillow's 2025 housing market forecast, where they actually call out where home prices are going to grow and where they're going to fall in the US. And it's just a forecast, but I think it was important to kind of, hit on that at the end of this live. So stay tuned for that. If you have a housing market you want me to analyze during this live, drop it in the comments below and I'll try to get to it today. If not today, I'll do it on the next live or maybe just on one of my weekly videos. So, all right. Thanks for joining me today. Let's get going. All right. Just 1 minute here. Okay, so this is the Redfin article that they publish every week. They publish this article on on Thursday morning. They usually update their data for this article on Wednesday afternoon. So this is really the most up-to-date housing market data available that I've found because they update this every week. So it's a great way to keep your finger on the pulse of the overall market. Now, remember, real estate's hyper local. What happens in your subdivision, in your school district, in your neighborhood is going to really determine, what you're doing with real estate, right? I mean, do you really care what the national number is necessarily when you're actually making your offer on a house or you're trying to sell your house? Not normally, right? But the overall picture nationally gives you a picture of, what's happening and, kind of the trend and the flow of everything. And I should also mention this disclaimer. I'm not a financial advisor. I'm a realtor. I'm an investor outside of Columbus, Ohio. And, I'm not an accountant. I'm not an attorney. So when you need legal advice, when you need actual tax advice, uh, you need to seek a professional out, not just listen to somebody on YouTube who's a realtor and investor like me. So, having said that, let's get going. So the title of this article is "Early Stage Home Buying Demand Jumps to Its Highest Level in 15 Months, Despite High Mortgage Rates." So, unless you've been living underneath a rock, you understand that mortgage rates now are like, I checked this morning, they were 7.05% according to Mortgage News Daily. So, mortgage rates haven't really shown any relief, honestly, since the Fed cut rates. So what Redfin says here is kind of strange because they reference several times that buyers are running back in, demand is running back into the marketplace because of the election is over and the Fed has cut rates twice. Well, the Fed has cut rates twice, but interest rates have gone up. Mortgage rates have gone up. The federal funds rate's gone down, but mortgage rates have gone up. So I'm not sure that's why people are running back into the housing market. All right. So I highlighted a few sections of the article that I thought were kind of important or interesting. Home buyers are jumping into the market now that the election has passed and the Fed has cut the interest rate for the second time in a row. See what I mean? I'm not sure that I just thought that was funny, so I highlighted it. The number of people contacting Redfin agents for help buying or selling a home is up by double digits from a year ago. Redfin's Home Buyer Demand Index, a seasonally adjusted measure of those contacts, rose 17% year over year to its highest level since August 2023. So they're saying they have a proprietary way to gauge home buyer demand, and they're saying that's increasing. It's up 17% year over year. Now, what's weird is mortgage purchase applications, the people actually applying for a mortgage, that's not up 17%. That's barely up at all. But overall, they're saying the demand is up 17%. So, Believe that if you want. That 17% increase is the biggest increase since January 2022. It's worth noting we're comparing now to a period in 2023 when mortgage rates were pushing demand down. So yeah, last year mortgage rates were higher, 7.44%. So they're like, all right, we're comparing demand last year versus this year, but demand last year was really bad. So if demand this year is just a little better, then it's going to look a lot better, right? Because you were in the basement before. So you're up one step out of the basement, still not very good as far as demand goes. So I'm going to skip some of this article here. This is really important. Maybe one of the more important things that I'm going to show you today, and something you should watch in your local housing market. New listings rose marginally 0.4%, not 4%, 0.4% year over year. And the total number of homes for sale is up 11.8% year over year. I mean, you got to remember, there was a time when we were up like 27% nationally year over year in the number of homes for sale. Now we're only up 11.8% year over year. And we were coming from a time when we had historically low levels of inventory. So in order to have more inventory, you have to have more new listings. Well, we're not adding a lot of new listings now. We're barely adding more new listings than we are selling homes. So active inventory, the number of homes for sale is growing. It's grown year over year, but now it's falling month over month. We're actually losing inventory right now. It's nuts. So this is interesting here. What this Redfin this Redfin agent says. I'm advising buyers. Meme Logins, a Redfin premier agent in Portland, Oregon, says, I'm advising buyers who can afford today's high cost to move forward because prices are lower in this area. I guess in Portland, they're lower than they were a year ago. And they're likely to shoot back up soon as competition heats up and sellers choose or should consider listing now because there are serious buyers out there, especially for desirable homes. So they're saying, hey, hurry up and buy now because competition is going to heat up. And if you're going to consider selling, you should sell it now because there's serious buyers out there, especially for desirable homes. Okay. I mean, I'm always hesitant when someone says that you should buy now, or it's a good time to buy, or it's a good time to sell. It's like, well, maybe for that person, maybe not. I'm not sure I always agree with the way they sugarcoat everything on Redfin. But nonetheless, that's their article. You can read it for yourself. The link's in my description below. But let's go over through the daily or the indicators of home buying demand activity. Daily average 30-year fixed mortgage rate, 7%. You can see that here, 7.05%. When I checked this morning, that's what they have too. Near highest level since July, but down from 7.13% 2 weeks earlier. It's down year over year from 7.37%. So it is down, but it's not down a ton. I mean, if you calculate your mortgage payment, you're going to see that there is a difference between 7.37 and 7.05, but it's probably not a ton. I mean, I guess it depends on how expensive your house is, and how much you put down, but it's not a ton. It's not like, 2 percentage points, right? So go down here to mortgage purchase applications. This is important too. They're up 2% from a week earlier, but down 1% year over year. So this time last year, just think about this. This time last year, there were more people applying for mortgages. And how can buyer demand be up 17%? You have to apply for a mortgage to get it. So I don't know. The fact that they say we're up 17%, but mortgage purchase applications are down 1% year over year, that's strange to me. Anyway, so there are a few more people applying for mortgages than they were last week, but 1% less than last year. Redfin Homebuyer Demand Index, highest level since August 2023, up 17% year over year, biggest increase in 3 years. See what I mean? That doesn't make a whole lot of sense. Touring activity. How many people are seeing homes? Down 3% from the start of the year. Google searches for homes up 15% from a month earlier. So more people are looking for homes than they were last month, but just as much as they were last year. So that's the top line indicators. Now we're going to look at the U.S. highlights. This is for the top 400 metros, just the top 400 metros. They're not looking at every metro, just the top 400, which is a good portion of them, right? Median sale price. Brace yourself, 387,475, biggest increase since October 2022. I mean, the median sale price is like really stubborn nationally. And it's not the best way to gauge value, obviously, especially for your local market. It's actually a horrible way to gauge value if you look at the national number, right? Because there's a lot of areas where we are seeing price declines. We'll get to those in a minute. Median asking price, how much people are asking for homes, $389,000. Median monthly mortgage payment, $2,593. That's at a 6.78% mortgage rate. So that's the median monthly mortgage payment, and year over year, it's up 0.5%. So it's actually higher now, higher than it was last year. Yeah, you heard me. Mortgage payments right now are higher. The median monthly mortgage payment's higher than it was this time last year, even though rates are lower. Why is that? Because the median sale price is higher, right? It's just plain. You can easily see it on the graph. I'll show you the graph here in a minute. Pending home sales. Aha. This is like, I would call this the trifecta of home of indicators that you should look at. Pending sales, 72,000. That's a 4.5% increase year over year. New listings, 76,000. That's a 0.4% increase year over year. Active listings, 1,015,975. That's an 11.8% increase year over year. Smallest increase since March. So, pending sales. If you have 72,000 houses going to contract, and you add 76,000 to the housing supply in new listings, then you're only adding roughly 4,000 listings, 4,000 listings to the market. So that's not good. That's not going to fly, right? I mean, you're not going to add a ton of a ton of active inventory to the market if you're only adding 4,000 in a 4-week period. I mean, it'll take forever to get to an inventory level that makes any sense. So to me, those are the big indicators. You will see, if you want to see stress, or you're waiting for like forced selling, right? Distress selling, people that have to sell their home or they're ruined. If you're waiting for that, or wondering where the heck is that, or when's it coming? Well, watch new listings. I mean, there have been months in the last 2 decades where new listings have been like $200,000 or some $200,000, 200,000 units for the 4 weeks. So when you only add 76,000, it's just not enough. I mean, and we have really low demand right now. You got to remember that. Like, our demand is not great. Okay, we just went through that. So if you have low demand and not a lot of new listings, your active listings aren't going to grow, and prices are going to have a hard time crashing. So you want to know what's really going on in the housing market? Still lagging when it comes to new listings. Active listings aren't amazing nationally, and median sale price is still high and growing. Let's see. All right. So, months of supply, 4 months of supply is where we're at right now. I'm just going to buzz through these because we're going to go over that Zillow data here in a minute. Median days on market, 42. So it's up 7 days year over year, but it's not like skyrocketing anymore upwards as far as the growth of how long homes are sitting on the market. You know, you watch this one too, because if homes sit on the market 60 days, the median days on market grows to 60. quickly, means there's a lot of inventory sitting doing nothing. Share of homes sold above list price. Can you believe this? There's still 25% of homes are sold above list price. People are still paying more than list price for homes. 25% of the time, by the way. Now, it could be people who, a home's listed at like 100 grand and somebody comes in and makes an offer. They may make it at 101 or 102 or something in order to have the seller pay more in closing costs. That's possible. It's possible. Sometimes that happens, but that's not 25% of the market. Average sale to list price ratio, 98.6%. So people are getting a small discount overall when you look at the average sale to list price ratio, but there is 25% of the market still paying over asking. Nuts, right? Last year it was 28%. Now it's 25. So I don't know if that's much better or not. All right, we're going to look at the metro level highlights next. So they take the top 50 most populous U.S. metros, and then they look at them and say, all right, who's the winners, who's the losers as far as various indicators. So we'll buzz through that. Before we do, let me just get to a comment. What's up, Scott? Scott Hamilton. Could falling inventory be due to sellers pulling their listings over unsatisfactory responses? Ding, 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 ding. I didn't mention that, but thank you, Scott. And thanks for the comment. Appreciate it, man. So, yes, that can definitely happen. You will start seeing that more and more in the winter, I'm guessing. So that's a good observation. Falling inventory could be due to the fact that people are yanking their home off the market going, you know what? I listed the home in October. Now it's December and I'm not getting any love. And a lot of that is wish pricing, right? So people who list a home for sale over where they should have, a $400,000 home listed at $450,000. When the one next door is sold for $399,000, right? And this person thinks, well, my home's special. Everybody thinks their home's special. I don't think I've ever met a seller who said, you know what? The homes on the street are much better than mine, so list mine for a lot less. People don't say that. They're proud of their home, and they should be. So they try to get as much as they can. So people will list it at $450,000, not getting any offers. Then they yank it off the market, and that takes the active listing count down. I think there's a combination of that and the lack of new listings. So good observation, Scott. All right. Next, median sale price, where it's going up, where it's going down the most. Cleveland, Believe Land, up 13.7% in median sale price year over year. So prices in Cleveland, 13.7% higher than they were this time last year. Newark, New Jersey, 12.5%. Milwaukee, Detroit, and Miami are the top 5 cities with the biggest year-over-year increase in median sale price. Metros with the biggest year-over-year decrease, there were 2 out of the top 50. Atlanta and San Antonio, and they're down less than 1%. Notice what's not on here. What's not on that list? Texas, Florida. Huh? What? Yeah. Texas and Florida are not on this list this week. So you want to know what's really going on with the housing market? Well, there are areas that are seeing some softening in prices, but I think when I looked at the top, we'll look at this in a minute with Zillow, but there aren't a lot of metros. I think there's only like 8 metros in like the top 100 that I could find that had median sale price decline. So even in the top 100, there's just not a lot. Month over month, there's probably some drops, but year over year, home prices are stubborn. They just are overall. And, when you look at the top metros, not saying they're not dropping in your neighborhood, they could be. Pending sales, San Jose, Dallas, New York, Portland, Fort Worth, Texas. That's where pending sales, the number of homes going into contract, is growing the most. Where are home sales falling the most? Miami, Fort Lauderdale, West Palm Beach, Atlanta, and Houston. I would guess the Florida metros, a lot of the low pending sales are because of the hurricanes. That's a guess, complete guess. But there's 3 Florida cities on there, and then Atlanta and Houston. So if you look over here, increased in 38 of the top 50. So 38 of the top 50 metros had a year-over-year increase in pending home sales. Means more sales activity, not less. Not less. New listings declined in 20 metros. Declined. We're not even talking about like, I mean, if you're declining year over year in new listings, it's going to be really hard to grow active listings. And then, like Scott said, you've got people then delisting their homes, taking their homes off the market, for the holidays. Nobody wants to have open houses and showings during Thanksgiving and Christmas, right? Nobody wants to do that. So because of that, people will take their homes off the market, especially if they haven't got any offers and not a lot of traffic. So because of that, active listings will fall. But if you're not adding new listings like you were last year, it's hard to grow inventory. Washington, D.C., San Francisco, Seattle, New York, and Baltimore all had the largest increase in new homes hitting the market, or new listings, not new homes necessarily, homes hitting the market for sale. Austin, Atlanta, San Antonio, Las Vegas, Detroit all had the largest decrease in new listings. So look at Austin and San Antonio, like those were awful when it came to home prices. Like home prices have actually gone down in those cities. In a lot of Texas area, in a lot of Texas cities, prices have gone down month over month and sometimes year over year this in 2024. But now you're seeing new listings plummet. Well, if new listings plummet again, that may affect the price. The price may swing back up because there's going to be less inventory eventually if new listings can't catch up. So anyway, that's what's happening with the metros there. All right. So their charts are really strange this week. They have it, I don't know. They don't have it formatted right. So I'm going to show that. I'm going to skip that and go to this instead. All right, how am I doing on time? Good. I'm going to buzz through this. So let's go ahead and look at the metros that I wanted to analyze. So the first one is Columbus, Ohio. Again, I'm in Columbus, or I'm outside of Columbus rather. And so I always do this one. I always do Cleveland. I always do Cincinnati because I'm a homer, I guess. So new listings in Columbus, Ohio. What's happening with new listings? New listings down 6.6% year over year. People they're not even listing as many homes as they did last year. So what do you think that's going to do to active inventory? That's right. It'll eventually drop it. Active inventory will suffer. So active inventory now in Columbus. Man, look at that. It's dropping now. You can see it because new listings are dropping 16% more than last year, but they're starting to fall in Columbus. I'm curious, how did pending sales do? Pending sales are only up 2.2% compared to last year, and they're headed down. So it's just a stale market. It still continues to be frozen. We have added a little more inventory in Columbus and Central Ohio, but not enough to throw a celebration. Median sale price. This is just like the national trend, folks. What I'm seeing in Ohio is year over year up 8% in the median sale price in Columbus. 8%. It's just not. I can't believe it. I can't believe prices continue to go up here in Columbus, and it's not good. It's not good for the locals. That's for sure. There's no doubt. Okay, let's do Cincinnati. Let's do Cleveland next because Cleveland had a big increase. Remember, stay tuned for the end after I'm done with these charts because I'm going to show you the Zillow forecast for next year for a lot of these cities. All right, Cleveland, Ohio. Median sale price in Cleveland, Ohio. 14% increase year over year. Look at that. Holy Toledo. A staggering $233,000 now to buy a house in Cleveland. Yep. There are places with a pro football team, if you want to call it that, you can still buy a house for $233,000, the median sale price. All right, let's look at new listings in Cleveland, see what's going on there. Yeah, there's no new listings at all, hardly. And I think active listings, that was down. Yeah, look at this. Active listings are they're at a 4-year low. A 4-year low in Cleveland for active listings. We would never think that. That means that there are less homes for sale. Think about what this means. Less homes for sale in Cleveland right now than there has been over the last 4 years at this time of year. I mean, that's what I mean, prices can't fall when that happens. They just can't. There's nothing to buy. There's nothing to sell. Amazing. Okay, let's do Cincinnati. Cincinnati, Ohio. Active listings in Cincinnati, Ohio. This is for inventory, obviously. That is up still 47% year over year. Man. But how are new listings doing? New listings up 3.1% year over year. Active listings look like they're kind of holding. Are they holding steady? Let's go back to active listings. Yeah, they're kind of holding steady. Active listings are. All right, let's do median sale price. Median sale price up 4% in Cincinnati, $288,000. So in the Battle of Ohio, I guess Cincinnati wins as far as the median sale price, but Cleveland wins as far as the growth of median sale price. 306,000 was the peak in Cincinnati this year. $306,000. So it looks like inventory there is kind of sustaining in Cincinnati. If there's a lot of new listings that hit the market and demand stays low, let's look at pending sales. Pending sales up 11%. So there is activity in Cincinnati. You got some people listing, some people buying. That's good if you're a local and you want the prices to change a little bit. You know, you want to see them go down. You need some inventory. You need some people selling their homes. And again, you're going to see the distress in new listings. If new listings spike wherever you are or nationally, you're seeing that new listing number spike all of a sudden, probably there's some distress there. People having to sell, pulling the fire alarm. Red alert, red alert. DEFCON 5, gotta sell, gotta sell. Everybody, a lot of people think that's going to happen. Haven't seen it yet. Doesn't mean it's not coming. We just haven't seen it yet. So can only go on what we have. All right, that's Cincinnati. Let's do, I've got Los Angeles next, but we'll stick in the Midwest for now and do my other city here. I was going to do Indianapolis. Indianapolis, Indiana. Not too far from me in Ohio here. Pending sales. How many people are buying and selling homes? Up 5% year over year, almost 6%. We'll call it 6%. New listings, though, down 2.9%. Yeah, just not a lot of new listings hitting the market there in Indy. Active listings in Indianapolis. Now look at that. Now active listings, unlike Cincinnati, where it was like level, right? You were seeing it level off with active inventory. A lot of stuff hitting the market, some coming off, but not like Indianapolis or Columbus, where you're seeing active listings start to drop now. There's still 45. Is that right? Nope, that's not right. It's hard for me to click this exactly. They're 1.43% more than last year in active inventory, but it is starting to head down now, as it does during this time of year, right? You're not adding inventory usually in the winter, but we were so bad over the last few years. You just got to think that just a little increase in change is going to make a big difference on these graphs. So it's just slow. People are just staying put for the holidays. All right, median sale price. What's up with that in Indy? Not crashing, kind of sideways. $296,000. That's 3% more than last year. They peaked in Indy at $321,000. All right, let's do the next one, which is Chicago. We'll work our way west. Chicago. I had somebody ask for Chicago a few weeks ago, and I forgot to do it like 2 weeks in a row. So I don't remember who it was, but this is for you. Median sale price. Median sale price. $349,000 in Chicago. That's up 10% year over year. No signs of crashing. Like you can see the sale price. It's dipping. Seasonality looks like it always dips this time of year. They peaked with a median sale price in Chicago, 373, up 9% back in June. A lot of places peaked in June. Now 349, 10% year over year growth. Excuse me. New listings. Down 5 point. That's a 4-year low in Chicago for new listings. 4-year low. So you've got it just tells you, again, going back to the title of this live, what's really going on in the housing market. People are just not doing anything. They're not buying, they're not selling for the most part. There is a little bit of activity, a little bit more after the election. You may hear that in the media and whatever, but it's still not amazing. Chicago's at a 4-year low with new listings. That's not going to cut it if you're somebody waiting on prices to go down. Active listings. I wonder what this looks like. 4-year low in active listings. Jeez. So Chicago, they have fewer new listings or fewer homes on the market and fewer new listings hitting the market. This time of year, if you look at the last 4 years, it's a 4-year low. That's not sustainable when it comes to prices. We already looked at prices, right? So we did that. Okay, let's do the last one on my list here is, unless somebody has one for me, Los Angeles. Los Angeles. Active listings in Los Angeles, they're starting to go down. Some of that could be seasonality, but let's look at new listings and see how they're doing. New listings are going down. Again, a lot of places will experience new listing decline during the winter because people don't want to put their homes on the market. But again, if you were seeing distress, if distress was like rampant in Southern California, in Los Angeles, you would see that new listing number go up. Just not seeing it. I'm not seeing it. Active listings in Los Angeles. Oh, we looked at that already, didn't we? 18% increase year over year. Let's do median sale price for Los Angeles. $909,000. Man, Chicago's in the 300s, right? Which is unbelievable. Columbus is in the 300s. They're 340, 356? No, 346. Cincinnati is in the 200s. Cleveland's in the 200s. Then you got Los Angeles at 909. 3% year over year growth of the median sale price in Los Angeles. They did have a dip. Look at that dip they had, down to 882,000. That was a deal, right? And they peaked at 933,000 back in June. So, as I look through these cities, and it won't surprise you because I am nerdy with housing market data, I'll look through these charts, not on these lives, just when I'm, preparing for these videos. I'll look at these charts. It's hard to find a city, a metro, a big metro that has year over year price decline. It's hard to find. So I keep looking, and eventually, if everyone's right about the housing market crash, or I guess some people are right, then we'll see this number. We'll see this stuff change. You'll see the graphs change. You'll see median sale price come down underneath last year. But so far, that's not happening. Okay. So that is Los Angeles. See if I get any other. Somebody, hang on 1 second. Let's do a. If all cash deals and well-qualified buyers are completing transactions, this could skew the median sale price upwards. Melody Wright talks about increased mortgage app rejections. If all cash deals and well-qualified buyers are completing transactions, this could skew the median sale price. Well, I understand I think I understand what you're driving at. And by the way, I respect Melody. She has great data. I just wish she was less less angry about the housing market. Like she's like, it's almost like she's excited for like doom. It would like make her giddy if the housing market crashed for some reason and people were like financially ruined. So if it wasn't for that, I would respect her probably more. But I love her data. I guess if you're are you saying that? I guess I don't understand how that would change median sale price. If all cash deals and well qualified buyers are completing transactions, yeah, mostly they're probably well qualified. There's not a lot of okay, Scott. So there's not a lot of lower price homes on the market. That's for sure. There's less lower price homes than expensive homes on the market. And so when you are selling homes and there's not a lot of lower price homes on the market and you're looking at the median price, the house in the middle, not the average, but the median price, the one in the middle. Yeah, if you're selling a lot of luxury homes, that's going to make that number go higher, right? Yep. Good point. I think that's what you're saying. There are a lot of cash deals too. It's like over 30% of the market right now, I believe. The last stat I saw are cash deals. But I don't know that that's making the price go up, the cash part, because when people pay cash, they usually make a lower offer. So that would if it was all cash deals, if every deal was cash, I would think the prices would come down. But thanks for your comment. Atlanta. Josh, I'll do Atlanta. All right. Suckered me into it. Atlanta. ETL Atlanta. Median sale price in Atlanta. Oh, hey. Good job, Josh. We found one. Median sale price down 1% year over year. Did you know that, or do you live there? That's great. Thank you for that. That's good. So here's one metro where home prices are lower than they were last year. Found the needle in the haystack. Good stuff. Let's look at new listings in Atlanta. See what's up with that. Wow. Look at new listings down 16%. Man, there's just nothing hitting the market there compared to the last 4 years. Active listings. Yeah, active listings are dropping too, down 0.49%. So here's a metro where you have less active listings than last year. You've got less new listings than last year, a 4-year low for new listings, but median sale price actually has come down. I don't know if it'll stay down though, because it looks like this gap was pretty big from 23 to 2022, but it could, median sale price could continue to come down. I wonder if it's just homes sitting on the market, like long time, right? What's days on market there? Let's look at that real quick. Median days on market. Median days on market. Yeah, look at that. Look at median days on market. Wow. How long homes are sitting on the market? 17 days longer than last year in Atlanta. So, yeah, I guess homes are sitting on the market long enough that they're discounting them, and then hence they are they're selling them for less. Price drops. Let's do that. See what happens there. Yeah, look at price drops go up. So that's the percent of homes with an actual price cut. 6.5% of all listings. It has gone up though recently. And it's gone up all year. Look where you started with price cuts. 2.6% of the listings have price cuts. Now you've got 6.5% of the listings have price cuts. Wow. Thanks, Josh. What's up? Oh, you've got some flavor here, some commentary. Atlanta is one of those metros where people know what's going on and are actively trying to control the market. Yeah, I don't know a lot about Atlanta. I mean, I've been there obviously, but I don't know much about the housing market except what I can see here. Well, it looks like prices have leveled, and it looks like maybe they're going down. We'll have to see. I'll check Atlanta next week. Hey, come back to the live next week, Josh. Remind me to check Atlanta. Let's keep our tabs on it and find out if prices are going to keep going down. Okay, so that is the Redfin data. Now, the next, oh, you commented one more time. All right, I'm a sucker for comments, I guess. In 2019, home houses were going for like 250, and now they're selling for 450. Yeah, home price growth nationally since 2019 is ridiculous. It's like in the 40s, 45% range, I think, still. Homes are 45% more expensive now than they were back in 2019 on average across the US. So I think it's like in the mid 40s based on most of the data I read. So yeah, it's hence the unaffordability is off the charts, and why home price or housing payments right now are at a almost a record high. That's why. Okay, let's do the Zillow thing now. So I'm going to show you an article from this article is from Resi Club Analytics. And let me just make this a little bigger. All right, so this is an article that a guy named Lance Lambert puts out. He's out of Cincinnati, runs Resi Club. And if you haven't looked at Resi Club, you should, because they have data like this. And this article is actually free. They have a lot of free articles. There's a link. I think I put a link in my description below. If not, just go to Resi Club Analytics or Google it, whatever, and you'll find it. But this is Zillow's home price forecast. So this will tell you, well, this doesn't tell you. This is Zillow's opinion. I should say that differently. This is Zillow's opinion on where home prices will go over the next 12 months. So now we know home prices have gone up this year. We know they have in 2024. We just looked at that. They're still up. A lot of people were hoping, wishing, wanting, praying that prices would end up lower on a national average, end up lower than 2023, but that's not the case. So now the question is, what's going to happen in 2025? Are home prices going to continue to go up according to Zillow, or are they going to go down? Now, Redfin doesn't do this exercise. Zillow does. And what Resi Club does that I don't see anyone else do is they take that Zillow info that you can download by yourself. It's free to download the Zillow info on their in their data center, just like Redfin's data is free. And you can download it, and then Lance at Resi Club puts it into a nice map so that we can kind of look at the country and analyze what's going on. So I'm not going to go through the whole article. I'm just going to hit on a couple points here. But Zillow's latest forecast expects U.S. home prices to rise 2.9% year over year over the next 12 months from October 24 to October 25. Zillow, I think the last forecast said that we were going to be flat. Now they're saying we're going to go up 2.9%. Obviously, they're going to revise the data and their forecast as the market changes, right? So let's scroll down to here. And here are the cities that they project to grow the most in home prices. Atlantic City, Kingston, New York, Augusta, Maine, Pottsville, Pennsylvania, Knoxville, Tennessee, Vineland, New Jersey. Is that Vineland or Vinland? I don't know which one. Lewiston, Maine, Concord, New Hampshire, Bangor, Maine, and Muncie, Indiana. Notice where these are all located, pretty much. Midwest and Northeast. Now, where are they going to drop the most? Lake Charles, Houma, Louisiana, Lafayette, Louisiana, Johnstown, Pennsylvania, New Orleans, Eureka, California, Beaumont, Texas, Odessa, Texas, Shreveport, Louisiana, and Hammond, Louisiana. Look at that. 1, 2, 3, 4, 5, 6. 6 of the top 10 markets that they say are going to drop the most with home prices are in Louisiana. 6 of the top 10 in Louisiana. Then you've got what? 1, 2 in Texas, 1 in California. So it's and then 1 in Pennsylvania. So it's like that's where they think home prices are going to drop the most. Most of them are in Louisiana. But for a really fun time, we're going to do this. We're going to look at this on a map. So if you got an area you want me to click on, I'll click on it. So the circles, the colored circles, if it's blue, it means the home prices are supposed to go up year over year. Or grow between, I guess, now and this time next year. That's a better way to say it. If they're red, it means they're going to go down, according to Zillow. If it's a big circle, it means a bigger change. So a big blue circle would mean it's going to go up a lot. A big red circle would mean it's going to go down a lot. And again, this article's free, and you can get them from Resi Club. They have a paid subscription with more robust articles, and then you can actually download Lance's analysis, which is a great value too. I think it's like $140 a year. But yeah, his data is amazing, as you can see. All right, so let's look at like Columbus, Ohio. They say home prices are going to grow 3% next year. That's what Zillow says. Let's look at Atlanta. We were just talking about Atlanta with Josh. Atlanta, 2.6% growth year over year. Notice the key, or the whatever you want to call it, the legend, I guess. Down 5%, up 5%. So there's not a lot of areas that are going to grow more than 5 or shrink more than 5, according to Zillow. Like, you're not seeing areas down like 40%. You're not seeing any areas with double digits either, according to Zillow. Interesting, right? So let's do another Ohio city here. Cleveland, supposed to grow 2.8%. And actually, let me do this. There we go. Is that better? Cincinnati, 2.8% growth year over year. Let's find an area that's going to shrink. Well, like they said, there's New Orleans. Down 3.8%. Austin, Texas, down 0.4%. Less than 1% drop year over year, according to Zillow. That's what's coming. This is their forecast. They think home prices will basically be flat. I mean, go down a little bit in Austin. San Antonio, up 0.2%. I mean, I'm really struggling here to find an area that has massive declines, according to Zillow and their forecast for next year. San Francisco, down 2.3%. Okay. That's not a cataclysmic drop, right? Riverside, California, up 2.9%. So a lot of these areas are actually going to grow, according to Zillow. Look at this, how do I say this? I have to calm down a second. The part that I do not understand is, how are they saying there's not a Florida area that is going to drop? They're saying all Florida is going to grow, basically, right? I mean, yeah, there's not one area where home prices are supposedly going to drop in Florida. How's that possible with the inventory growth they've had and everything else? It just doesn't make any sense. It doesn't make any sense at all. I think Lance calls it out in his article too. Like, what, really? Not going to see any price drops where tons of condos have hit the market because of, in Florida, because of the assessments. We're not going to see any effect from property taxes and insurance. Remember, Zillow is actually, they've revised this up. They were only up like 0.9% and in their forecast. Now they've revised it to 2.9%. So they're like more bullish, I guess you could call it, on the housing market. Let's look at some other areas where it's going to drop. Oh, okay, here's one. Down 7.8%, Lake Charles, Louisiana. But notice all the red spots are like in the south here. Pine Bluff, Arkansas. I've been to Pine Bluff, Arkansas. I have been there. Down 1.8%. Odessa, Texas, down 3%, according to Zillow, for next year. But like up in the Northwest, Seattle, up 1.7%. Portland, 0.3% growth. Let's find somebody who's going to grow a ton. There aren't a lot on here where they're saying El Paso, 3.5%. Hilton Head, 4.9%. Hinesville, Georgia, 4.5%. I'm just really curious again. None of these Florida cities have projected declines. It's nuts. All right, let's look in here. Atlantic City, up 6.5%. The forecast is 6.5% growth in home prices in Atlantic City. Kingston, New York, 6.1%. What else we have near? How's New York City doing? New York City up 1.5%. Excuse me. So at the beginning of this, the beginning of me showing this map, I said, hey, the larger the circle means more growth. That's not true. Larger the circle, I believe, is the size of the metro. That's what it is. My fault on that. What do you guys think of this map? Comment below. I'd love to know. What do you think of this map? What do you think of this forecast? 2.9% nationally. Zillow saying no housing crash next year. Didn't have one this year. Not going to have one next year, according to Zillow. Is that right? I don't know. Tell me what you think. But it's clear to see that the only areas that they say are really going to go down are like the Gulf, right? Some of the Gulf area, Louisiana, obviously not Florida. They're saying that's going to continue to go up. And then some California areas, like here's Chico, California, down 2.1%. We did San Francisco. You got Santa Rosa, down 1.6%. But Los Angeles, they're saying that's going to grow 2.3 out in Cali. San Diego, 2.3. Let's do, you got Phoenix, 1.9% growth. What about Las Vegas? Las Vegas, 1.1% growth. Yeah. It's interesting to say the least. But anyway, I thought this was a pretty cool data set to show you guys today. I found it this morning and thought, hey, I'll put it on the live here and we can go through it. So maybe what I'll do is I will screenshot this. I'll hang on to it, maybe scribble some numbers down as far as the forecast for the growth that Zillow's projecting. And then we'll check it next year and go, all right, how did we do? How did Zillow do in their forecast? Yeah, so I think that's a little optimistic, 2.9% across the country. And I think having no Florida metros in that decline is very optimistic. I can't imagine how Florida cities are not going to see a price decline, but that's me. And like some of these areas they say are going to grow, like Columbus, 3%. We're up 8% right now. We're up 8% with home prices right now in Columbus. So shrinking, only growing 3% next year. Okay. But that's Zillow. All right. Let me see what else happened here. Oh, man. I left that up, didn't I? Real Estate Mindset does a decent job with Redfin. Yeah, he does, but he's kind of been helping folks in the hurricane right now. So I always look forward to his videos. And Josh is like all over the place today. Zillow makes more money when housing does well, so they are bullish. Same with Redfin. So I know people think that, but as a realtor, I can tell you that home price growth, like what we've seen recently, doesn't necessarily make, at least it doesn't make me more money, or it doesn't make the average realtor or agent more money. I don't think. I think more transactions will help. But I mean, obviously, if you get paid on a percentage of the sale, if values go up, sure you make more. But if there's no transactions, you're not going to make anything. So I don't know. I tend to think Zillow and Redfin just report the data. There's obviously some bias there when they do their articles, but I mean, like Melody Wright uses Redfin data. So, I mean, and she's pretty skeptical of basically everything. So I would think that Redfin data is pretty safe to use. But I get your point. Josh. So thanks for that comment. And thanks for your contribution today. There's one thing someone said. I live here, in Atlanta, and you've been searching for 2 years. Okay. Oh, to buy a home? For a home to live in? Or a home to invest in? I'm curious. Which one? Redfin just finally jumped when they were caught manipulating data. I don't understand why finally jumped. You have to clarify that one. I mean, I don't know. I don't know what you meant by that. Oh, okay. Sorry. this is some of these comments are hard to navigate, so I can concentrate on the technology side of it. A home to live in. Okay, so you're looking for a home to live in. Yeah, I mean, one of the things you should maybe check out is I did a couple videos on how to drive for dollars, Josh, where you get in your car. Maybe you already heard me mention this, but if you can get in your car and drive around the streets, you can look for homes in neighborhoods you want to live in that are off market, that aren't for sale, that maybe look a little distressed, perhaps, like the roof needs work. There's weeds growing in the yard in the summer. And if you're in an area where there's snow, there's no, it's not plowed at all. It just kind of, sits there. The snow sits there untouched. In other words, they look maybe vacant, or they need help, they need renovation. And write those addresses down, then go and research who owns the houses, and then send them a letter and say, hey, I'd like to talk to you about buying your house. Call me if you're interested. And you'd be shocked how many people reply. That's how I find a lot of my opportunities. And so check that out. I have a video called that's about driving for dollars. And then I got a video about how to write the letters. And they're older videos, so they probably need refreshed because it's the editing and the presentation isn't the best, but it gets the job done. And I didn't invent the process. I just took the process I learned from somebody else, tweaked it a little, and then I gave it to you guys for free. So there's no charge for it or anything like that to figure out how to do it or how I do it. So maybe that'll help. All right. Thanks for your comments. I appreciate it. So what's really going on with the housing market? Well, prices have not crashed nationally. They have not. New listings, they're not going up. There's not distress that's showing in the housing market when it comes to new listings. And hence, active listings have stalled. The number of homes for sale has stalled. It really depends on, and then I guess you could also say what else is going on is that Zillow is saying home prices are going to grow 2.9% between now and 2025. October of 2025. So, remains to be seen what happens in the spring selling season. I think that we're going to stay slow. I think the market's going to stay frozen through the winter. And there's a possibility that come spring of 2025, we see people start to list their homes much more than they did in 2024. It's possible. There's, if somebody's sitting on 200 grand in equity, then it's possible somebody goes, you know what? I just can't wait any longer. I want my money. And they go out and they sell their home and they cash in on the equity. It's possible that starts happening more and more as we hit spring selling season of next year. But it's also possible that, we remain locked, especially if mortgage rates don't drop. If mortgage rates stay the way they are, it's going to be a slow market. And so at this point, I'm thinking maybe we stay flat next year, maybe a 1% increase year over year nationally, maybe a 1% drop nationally. Like, I don't see a big swing either way. I think it's going to be another slow, boring year for the housing market. That's what I'm thinking now. And I'm going to look at more data and put out my predictions for 2025 coming up. But I'm curious what you think. What do you think is going to happen to the housing market next year? Up, down, sideways? Up, down, sideways? What's going to happen? I'll put Joshua one more time here. I agree with you, though. I think we'll see more stagflation than deflation or inflation. I agree. It's just going to be slow. I agree, Josh. So thanks for your comments, man. I appreciate your insight and your questions. And yeah, I guess I don't have anything else. I hope you have a great day. Look for the next Redfin live update. I'll do it. Let's see. Well, next Thursday. That's Thanksgiving, isn't it? Next Thursday. Is that right? Yeah, I guess it is. I probably won't do a Redfin live on Thursday, but they will put it out Wednesday. I'll try to do it Wednesday. So look for that. And yeah, if you're out there, trying to find a real estate opportunity, don't give up. Make a lot of disrespectful offers. Hunt for things off market. Push your realtor and your agent to do what you want them, to do. as long as it's legal and ethical. You're the boss in that relationship. Remember that. If you ever do a Discord or voice chat through Zoom or something, let me know. Oh, yeah, Discord. No, I haven't really gotten into that. Nope. Anyway, I hope you have a great day. We'll see you again on the next Redfin Live update.